Alright, folks, welcome back to the new video of our CRT series from Basic Advance. So we are now up to about 8 lecture of our CRT mentorship or series. So now we have left only 2 videos after this video, which will be the next video will be on the candlestick anatomy, which is OHLC and OLHC, which is the most important topic I think in the CRT. And in the last topic or in the last video, I will reveal my whole system or my whole strategy, and I will break down its rules, and I will share how to execute it. I will show live chart examples. Okay. So now let's start the video. So today's topic is about the SMT. Okay. SMT, which is a short topic, but a very important topic. Okay. SMT divergence. Okay. What is SMT? SMT stand for smart money technique. Okay. Smart money technique or smart money divergence. Okay. Simple. Okay. So now, let me tell you one more thing, that for before going to SMT, you have to know about the correlation pair. For example, if one pair is going upward, the other will also going upward. And the second one will also create same structure as the first pair. Okay, like both pairs will follow each other and will make the same structure. Okay, so now let me remove these drawings and let me tell you the pairs which are the correlated in this market. Okay, so if you are trading gold, okay, you will see your SLT with the silver. Okay, if you are trading NQ or MNQ, you will see your SLT with the ES. Okay, if you are trading Nasdaq, which is indices pair, then you will see your SMT with the S&P 500 simply. And if you are trading forex and euro USD, then you will see your SMT with the GBP USD SIP. Okay. So these all are the correlative pairs. By correlative, I mean they all move same together. Gold, silver move together, same, and they create same structure. And is move same direction. Nasdaq and S&P 500 create a same structure. WSD, GBP create a same structure. Okay. So now let me tell you that here is a moment when these both pairs become decoupled. Okay, become decoupled or create a different structure. For example, let me tell you, this is a gold, higher high, higher low, higher high, higher low, higher high, and higher low, and a higher high. So here you can see a gold chart. Okay, market is creating higher high, higher low, higher high, higher low. But and this is our silver chart. Okay, market is creating higher high, higher low, higher high, higher low, higher high. But here market didn't create any higher high again, but it takes the low instead of taking the high. So gold took the high and the silver took the low. So now in this place, this market is behaving in the opposite direction, and you can also say that this is a decouple movement for the these pairs. So now you will mark your SMT here. Okay, you will mark your SMT here. So these SMT are the strong sign of the reversals in the market. Okay, these SMTs are the reversals for the market. Okay, let me show you the real chart examples of this. Okay, then you will get it clearly. What do I mean and what do I want to say to you? Okay, let me just add S&P 500 to the chart. Okay, so now let me show you. This is a 1 hour chart. You can see clearly. This is the S&P 500. Let me show you the real examples. Okay, you can see clearly here. Note these timings. The 3 a.m. candle created high on the both pairs, and but note this time on the which is a 10 a.m. candle. In gold, this 10 a.m. candle created the lower high, but in this S&P 500 chart, the 10 a.m. candle created the higher high. Okay, so now this is a decouple movement for the market. So this will be your SMT zone. Okay, so what did I told you earlier that SMT are the strong sign of reversal. So now you will take your entry from the order block, which is these series of buying candles. Okay, you will put your order here and stop loss here, and you can target these DPT pools. Okay, simply. So this is an SMT example in the live chart. Let me show you other examples also on the chart. So you will get it properly. What do I mean? This systematic thing. Okay, gold, Nasdaq, Nasdaq. Let me show you the easiest example in the chart, so you will get it clearly. What do I mean by this? Okay, let's see here. Yeah. Just note this candle, which is a 5 a.m. candle, which created the high on these both pairs. Okay, and let's uh, see this one candle, which is a 14, which is around 2 p.m. candle on the EST to EST. So now on the Nasdaq, this 14 p.m. candle created the higher high, but on the other hand, on the S&P 500, this candle created the lower high. Okay, so now this is a decouple movement for the market or a reverse movement for the market. So now this is a strong reversal for the market. Sorry, because this is a strong sign of the market for the reversal, but here it fails. Okay, we do not have any like this is not a strategy. It can be used as a strategy, but with a different confluences. I'm not showing you this as a strategy, but just for making sure that you will get these stops. Okay, you will understand these things clearly. Let me show you other examples. Shit. This topic is pretty simple, but it needs some examples here. So, okay, just watch here. Okay, just watch this candle, which is the 13 a.m. candle. Okay, around 1 p.m. candle on the EST. Okay, and now let's focus on the 12 uh, p.m. candle or M candle. I don't know what it's AM or PM. Just forget that shit. So now here it is a decouple movement for the both pairs. On the Nasdaq, it created a lower high, sorry, but in S&P 500, it created the higher high. So this is a decouple movement for the market. So now you will wait for market to tap into your order block, which is here. Your stop loss will be about this high, and you can target the liquidity you want. You can just see how did market falls after that SMT. Yes, okay. So these SMTs are the strong sign of the reversal. So this was the topic for today. This is a pretty simple topic, and you also know about it. So let's end the video here. Okay, alright. See you in the next video about the candlestick anatomy, which will be about the second last topic about the CRT. Okay. Alright. Goodbye, folks.